I've analysed S&P 500 data over the last 100 years to look at how long it takes to recover from a crash in a variety of different scenarios. First, I looked at what happened when there was a 10% crash in the stock market. Since 1929, there's been 17 times the market has crashed around 10% in the S&P 500. The average crash, meaning the average time the stock market went down after the first signs of a crash, was around 1.1 years. And the average time when it started to recover to get back to where it was at the start of the crash was 2.7 years, meaning it took on average around 3.8 years to go from the beginning of the crash to reaching the end of the crash and the recovery. And the average drop in this time was around 28.8%. If we look at times the S&P 500 has crashed at least 20%, we can see that there's 10 of these situations, with the average crash where the period goes down is around 1.3 years, and the average time to recover once it starts going back up again is around 4.4 years. And this time the average crash was around 38.6%, meaning it took around 5.7 years to recover. If we then look at the amount of times there's been a 30% or more crash in the stock market, we can see there's been 6 of these since 1929, with the average crash lasting around 1.6 years and the average time to recovery lasting around 6.7 years. So the average total lasting about 8.4 years, which is starting to get a bit longer. If we then filter this even further to 40%, we can see that the average crash lasts around 2 years and the average time to recovery lasts around 9.2 years, meaning it takes around 11.2 years to recover. I think some of this is kind of blown out of proportion by the 1929 Great Depression, which took many years to properly recover. If we look at any times there's been a 50% market crash, that's happened twice. That's happened in the 1929 Great Depression and the 2008 financial crisis. If we average these, it takes around 2.1 years of continuous decline and then 13.2 years to recover, although most of that's driven by the Great Depression. Meaning it takes around 15 years to fully recover. So how do you think about this? I think you have to look at it this way. In the last 100 years, there's been 2 crashes that have dropped at least 50%. And I'd say you have to factor in a certain level of risk. But if you factor in around a 20% drop, where there's been more of those, there's been 10. If you look at that, since the beginning of the drop, there's around a 5.7 year time before you get back to where the drop was at the beginning. And so I'd say if you're investing and you're factoring in a 5 to 10 year time horizon before you need the money, you're still reasonably safe. Of course, you can't fully account for the risk that there might be a massive crash of 50% or more, and that's going to take longer to recover from. But if this money is not something that you need in the short term, if you just leave it in when there is a crash and you don't take it out, it's likely to recover at some point. And it has in all these situations so far. It just varies in the amount of time it's going to recover and how the market's going to recover. So I think the key takeaway from this is that, don't panic if there is a crash, even up to 50%, don't panic. Don't withdraw your money, keep invested and let the market do its thing and recover over time. It just varies in time on how long it's going to do that. Anyway, like and subscribe to this video if you want to stay tuned for more content like this. See you next time. Goodbye.